speed dating I am. My name is Katarina Wangler-Björk, Head of Impact and Transformation, and with the Exponential Roadmap initiative here at the Arctic Base Camp, the economy stage of impact, with Exponential Roadmap initiative sessions number 3. And we're focusing on climate or climate and nature solutions and finance. How can we scale? How can we get exponential when it comes to speed and scale in terms of turning our economy to become fossil-free and nature positive? And with me, I have still my CEO, Johan Falk, Exponential Roadmap, and I have Elena. Sorry, Harumi Stark. I just forgot your name. It's too many names. Apologies. From Aenu, and you're head of impact and ESG. And you're working. You will be able to introduce yourself. But it's a VC fund, doing lots of interesting and good stuff. And also, I have Richard Probst from Climeworks, Vice President. Much welcome to have. I'm so happy to have you here, both the finance and solutions, and then Exponential Roadmap. I would love to have you want to start this session because Exponential Roadmap Initiative has developed a climate solutions framework, and I want you to just give a high-fly overview on why and what and why we did that.
Yeah, right. We know from a science viewpoint that we ought to have emissions by 2030. We should have started 5 years ago. We are behind, but we might be close to bending the curve actually, which is positive news. But we are behind the curve. One reason for that is to be able to shift out the fossil economy. We need to scale up the solutions, the climate solutions, to shift out the old economy. They need to scale much, much faster. They need to scale exponentially. We need to push the curves to the left. That is why it's so incredibly important not just focus on the down curves, but actually how we scale up the solutions and remove all the blockers and bring the finance to these solutions, and also set targets on scaling up solutions from companies' perspective, and also appreciate what we call the solutions companies bringing the solutions to the market, which needs to scale incredibly fast. So that's basically the background, and to be able to qualify these solutions, we also need sort of high integrity frameworks, because these solutions might need to raise emissions over a period of time and apply intensity targets. So it's really important to have strong frameworks so that you can actually qualify as a solution to be able to apply that practically. So that's the reason why we're also working with Oxford and others to develop these frameworks, so that we can also recognize and onboard solution companies to Exponential Roadmap Initiative and Race to Zero initiatives, and so on.
Thank you so much. And I think also it's I think one of the reasons that we want to have this conversation is that we also want to align with as many as possible to see what does good look like, what is good climate solution, and how do they, of course, diverse within different sectors and need different types of frameworks, but I think that is a discussion that we want to have, and also why we want to have both finance and solutions on this specific conversation, but also in general long term, and also to align with policy. So, Elena, please, would you like to introduce yourself and the work that you do at Aenu, and also if you have any, how you select your companies and what you invest in, and what you look for?
Yeah, happy to. I'm Elena. I'm head of impact at a climate tech fund based in Germany. We are called Aenu, and we currently manage 170 million assets under management. And we invest pre-seed, seed, so very early stage, to hopefully back innovators like Climeworks, for example, that can truly shift the paradigm we are on as a global society in terms of the climate crisis. And the way we select investments is based on a carbon threshold, which we apply. We can come in a second to how it maybe differs from the solution framework, which I actually really like. I really like that it takes into account a minimum threshold of what needs to be achieved in order to be quantified as a climate solution, because that's what we do as well. We apply a threshold of 50 million tons that a technology has to be able to reduce or remove at scale, and thereby try to select impactful entrepreneurs to back them with the money that was granted to us by our LPs.
Thank you so much. And Richard, please tell me about Climeworks and what you do, and also for the ones who don't know what you do.
Yeah, thank you very much. So we at Climeworks, we are a global leader in carbon dioxide removal, and I think we're also very proud to qualify for the 50 million ton potential. We are not quite there yet, but our goal is to remove at gigaton scale in the 2040s and 2050. So you might have seen some of our plans in various media features recently in the Bill Gates documentary of Netflix. It's essentially giant fans pulling out CO2 from ambient air and storing it underground.
And looking at clear frameworks for impact, how would that help you? Does it help you, or how have you been raising money so far?
Yeah, that's a very good question. So essentially, the carbon market or the voluntary carbon market has long been a bit of a Wild West. And we do need very high integrity frameworks to also showcase what good looks like. And what we orientate ourselves to is that a ton of carbon removal purchased actually means a ton of carbon removed durably. And for that, we need very reliable high integrity frameworks that essentially build trust, that warrant a higher price per ton than maybe a cheaper credit elsewhere.
Thank you so much. Johan, any reflections on what you heard so far with Elena and Richard?
I think what you're stating, I mean, impact investors need frameworks. I think there is an opportunity to collaborate. We have suggested sort of one type of approach. We also need other frameworks for, professional service providers, for carbon removal and nature companies. So I think there is a strong opportunity to collaborate there, to see how it's possible to align. It doesn't just have to be one framework. So we're very keen on doing that together and putting the emphasis on solutions, and also start to get the recognition of the solutions companies also from a global perspective, not only the big transformative companies with science-based targets. So that, I think, is incredibly important.
Yeah, and I think what's great about it is that as a fund, we of course have to diversify. So we have to invest in climate solutions, but some topics are excluded of the framework, for example, nature-based solutions and so on. Still, they will make up some sort of aspect of our portfolio. So I think the frameworks that funds will apply, of course, need to be diversified, but finding a common language on, for example, climate solutions, I think is really needed. Because if we look at current regulation, it's mostly focused on avoiding greenwashing, and having a clear term to coin climate solutions and their incremental impact that they are having, I think is a great way to start. And I think we need different sorts of definitions for different sorts of investment, because they will heavily differ. But that's also why we need them all in order to truly combat the climate crisis.
Thank you. And Richard, we talked earlier when aligning on this conversation about different types of financing during companies' different maturity stages, and also how impact and also how coolness play different roles during a company's maturity, and what is actually needed to scale on industrial levels. Can you tell a bit about your reasoning and your experiences so far, and also if you've seen other cases succeeding or failing, and what you've learned from your journey so far?
Yeah, thank you very much. That's a good question, and we just discussed it earlier. So essentially, I think all our hopes are on bringing climate solutions to industrial scale to really make a difference. And in order to achieve that, any company has to go through different life cycle stages. And in our case, which applies to a lot of deep tech companies, we started off as a university spin-off with some grant funding and lab scale experiments that could be funded creatively. Soon later, we had some venture capital funding, which helped us to make early steps and also build our first plant to show that you can actually remove not just grams, but kilograms of CO2 through direct air capture. But as you grow, you also need to show a business case. And in our case, a business case for very heavy CapEx investments. And this is where very impact-focused capital is super, super important to be generous with some of the conditions that still need to be met, but actually creates excitement and a hope for things to work. But at the same time, something else is very important to call out, and I'm sure, Elena, you will add on this. There always needs to be a clear business case, because it's not philanthropic capital that will make the move the needle. It will be large-scale capital, which also needs to, offer a return to all capital backers, which is we are seeing right now. We are backed by very strong investors, but we also really need to show a return on investment for them.
And do you see that is there enough capital for all the solutions that we need? Is that a hurdle, or?
I may not be the right person to judge if there's enough capital, but overall, I think with the existing capital, we can really make a difference. But we also need to, apply the right filter mechanisms and frameworks on choosing the right types of investment and lead with a vision. And I think if we really want to make a difference with the existing capital and the funds available, we can achieve a lot. Yeah.
Elena, any comments?
I think I would definitely agree. We see a lot of differences between early stage financing, as you said, and then growth stage financing for these climate solutions. I think it's a discussion that we have on multiple panels today, but in general is that there is a need for, let's say, a little bit of more patient capital, and therefore also maybe blended capital solutions in order to truly finance these climate solutions that are per definition to a certain extent capex and hardware intense, because we can invest in software how much we want. In the end, you need some technologies that are actually reducing the carbon or removing the carbon even. So I think there are some challenges when it comes to financing, but I also believe, specifically fitting to the location we are in today, there is a lot of dry powder in the market. So there is an opportunity to leverage more capital for climate solutions, and I think that's truly needed, especially in the later stages and for growth type of investments.
Very interesting. Going back to what you said about the need for more patient capital, do you see that discussion and conversation is happening, and where do different types of investors and institutional investors meet? Where does it happen, and will it happen? What is the outlook?
That's a very interesting question, and it's really hard for me to answer. The conversation is happening, but I think the action is lagging a little bit behind, because there are definitely funds who would like to apply more patient capital. I would include Aenu in this discussion. We would love to maybe be able to offer an evergreen structure and so on to support our founders for longer. But then, of course, you need to look also at the LP market. And especially the big institutional investors who would need to lead the change are also binded by incumbent regulations, like risk-related regulations and so on, which makes it hard for them to act. So I do believe the conversation is happening, but I think there is some time and some willingness to innovate also on the investors level needed in order to truly get it across the line. But if conversations happening, hopefully change will follow soon.
Thank you. Richard, we talked about risks earlier also. Would you add to Elena's outlook here?
I would strongly echo her statement on the need to innovate also on the financing side, because on our end we've gone through a long journey where we've kind of exploited the potential of venture capital, and now we also need to convince infrastructure capital to finance our plans. But those infrastructure investors are very experienced with low risk, high technological maturity investments, where a lot of the climate solutions simply don't fit in yet. So we do need to innovate also on the financing side to make available the dry powder that essentially is committed to advancing the sustainable agenda, but where some of the green investments don't easily fit in yet.
Thank you. We are getting close to a closure, 4 minutes to go, and I would like to ask 2 questions in one for a final round to all 3 of you. So we're all in systemic transformation, and there are a lot of types of actors that need to take the torch and run. Who do you see has the lead and should take the lead the coming years, and what do you wish for 2025?
Happy to start. Especially as an early stage venture investor, I think we will always follow driven entrepreneurs. So, of course, if there are solutions out there, especially early stage, I think there is a big willingness to finance them, even though the risk is high. So for us as Aenu, I think it's always going to be entrepreneurs. If I look at it on a systemic level, I do believe that the LP market also has to advance.
Thank you. Richard?
Yeah, would echo that statement, but maybe also call out those that actually have the power to send the right demand signals, to lead by conviction and not only by compliance regulation, because essentially small signals today can really make a difference on an exponential roadmap. It doesn't have to be a megaton purchase today to actually finance the next wave of information, next wave of evolution, technological innovation, etc. It really makes a difference to accelerate kind of the cycle of demand, supply, and policy in the right direction.
Yeah, I think what we highlighted is really lift the focus on financing climate solutions, but also innovation in terms of how you stage funding, also over to the pension funds, and the best practice for that. That's one part. The other is what we talked about before, this huge development of transition plans, where I think transition plans from companies and from nations, and now we connect financing to that, will be incredibly important. It's not just about company transition plans, it's about complete value chain transition plans. That's my third point. A lot of innovation in terms of financing across value chain transformation, because we need to be able to cover for the green premiums. We also need that blended funding, basically, where you would have actors downstream supporting an investment in innovation companies, upstream and downstream, which will drive the demand at the same time. So I think these type of innovative models will be incredibly important and very exciting.
Thank you so much. And since we have 1 minute to go, I'll also announce that we're at Exponential Roadmap continue this conversation. We're starting an investor track and looking at how can we align and share ideas on what good looks like in a conversation with different types of investor, but also different types of climate and nature solutions to have a shared vision and have a shared roadmap on how to come to action. So with that, join us for that. And I would like to thank Elena Harumi and Richard Probst for coming here and taking part of this conversation and sharing your experiences. A warm hand to you, and thank you, Johan.